do believe that the outcome of the elections doesn't change the India sort of growth story in a meaningful way. We are still looking for near 7% GDP growth in India. I think if you just look at the formation of the government or the ministries that were just allocated, what we will realize is that there is broadly kind of policy continuity. Most of the key ministries have actually been retained, in same as the previous administration, right? So I think even with slightly lower majority, we still think broadly A, policy continuity is in place. B, I think the India's macro stability continues to be there. I mean, we were just talking about the inflation data. Inflation is still it's inched up as we believed, but it's still within the RBI's target band. We think the government will continue to stick to fiscal consolidation. RBI got ample reserves, so you still got that macro stability, and then on top of that, you got strong earnings growth. So if you put all of these factors together, policy continuity, macroeconomic resilience, and strong fundamentals in terms of growth, we still think that the appeal for Indian equities remains, and we still therefore are constructive on the markets here.
And what about the upcoming budget? What are you telling clients on that front? Because it was, okay, so two things, right? Two concerns. One was that the coalition would stall the reforms agenda the government was so focused on. I had heard that, you know, if they would have come with a major majority, that they would hit the ground running with the first 100 days, really passing some of those path-breaking reforms. What happens to that? And second, does that increase the probability of more populist measures in the budget, whereby which they compromise, the government compromises on its fiscal consolidation path?
Yeah, I mean, great questions. Look, I'll say a couple of things. One, I think at the headline level, in terms of the spending, as I mentioned earlier, we do think overall fiscal consolidation will continue even with the revised administration. Number two, in terms of the spending there, I mean, we think they will continue to sort of provide sort of focus on infrastructure, sort of through railways and roads and all of that. I think will continue to be government's focus. On the margin, you're right. We could see a little bit of more support for welfare and rural support, sort of welfare spending. That could happen sort of tactically a little bit. But overall, we think any incremental upside they get from revenues will continue to be used for consolidation. And so, yeah, infra will remain focused, but on the margin, you're right. I don't think it will be hugely populist, but we think on the margin, they will provide support to consumption. And so one of the changes we have done after the elections in our allocations is that we did raise, for example, our sector allocations, consumer staples, from being underweight to market weight on the back of expecting some rural support from the government. And the last point you reforms, I would also add that, look, I think it's fair to assume that some of the harder reform in terms of sort of land and labor may be difficult to pass, but I think broadly speaking, most of the other initiatives they have taken in the last 10 years should continue.